So welcome to another edition of our Small Business Innovation Hour with John Crable and myself, Audra McIntosh. We come to you from Columbus State Community College and the Goldman Sachs 10,000 Small Businesses program. So we've been hosting these hour-long calls on Friday afternoon just to bring together a small business community and talk about some of the issues that you are having, or bringing on experts that can give us some insight into things that are going on for small businesses. This is the first in the three-part series that we're doing. We're calling it Small Business Decisions Now through 2021. And today we just wanted to have a conversation around capital and assets. So really taking stock of capital and assets within your company. How are we using them from an efficiency standpoint? What are some ways that we can think about them a little bit differently, or how can we work to make them strategic business decisions? So we do have Dwayne, who has joined us from U.S. Bank. And Dwayne, I'm going to turn it over to you and let you introduce yourself.
Hi, I'm Dwayne Lee with U.S. Bank. I've been in multiple positions that I think I can benefit everybody on the call with. I've been an underwriter for 20 plus years, and I've been on the sales side for the last 10 years. So during my course as an underwriter, I've worked in the SBA department. I've started programs such as the Community Express program with the SBA. I hate math. Should I say that? I hate math, but yet I've been in banking for almost 30 years now. I started out as a teller, worked my way up to where now I am a development consultant, and basically what that is I help businesses come into the bank. I get them ready, eligible, structured properly before someone gets them. As many of you probably know, most companies fall because they are not eligible for all the products and services yet that the bank can offer, or they're in the wrong product for any bank. And I'm sorry, I'm losing power here, so I got to plug it back up. All right. So, yes.
All righty. And Kathleen, thank you for joining us. I see Kathleen just was able to jump on. Kathleen, we were just doing introductions, so would love for you to share a little bit about yourself and what you do in your company.
Audra, thank you. I am the principal of a real estate and planning firm called Urban Fast Forward. We work almost exclusively in urban areas and almost exclusively with independent retailers, restaurateurs, and small businesses. We do very little work with giant companies, although we have, and we are our preference is to help smaller entrepreneurs find the perfect place in which to flourish, and help communities find a strategy which will enable them to move forward with their urban areas.
Wonderful. So, Audra, I wanted to go back to something that you opened today's segment with, and that was the idea of small business decisions that are impacting us now versus what's going to be happening in 6 months. And for all of us on this call, my guess is that you're having a tug of war between, I have to take care of this next week, I have to take care of this next day, versus planning for even 2 months out, let alone getting into 2021. So I'd like to ask the question to Dwayne first. I'm interested in, what are you hearing from small business owners and entrepreneurs right now? What are some of the most common problems, common questions that they're coming to you with?
Thanks, John. I guess the first question or the first need is cash flow. How do I increase my cash flow? Right now is a hard time for getting loans for small businesses on the banking side. So So what I do mainly in going in, talking with small businesses, I go in and offer them cheaper products than what they already have. That may be something simple as our credit card processing. We own Elevon, so a lot of times businesses are waiting 2 to 3 days on their credit card processing, and we can offer same day end of the night turnover for them. And then just looking at some of their checking accounts, I can offer them a free checking account as a small business where they don't have to pay those fees. This week, I've been really blessed. I was able to convert 7 businesses on their business credit cards over to U.S. Bank that where I looked at their pricing will save them at the minimum $300 a month. The largest one I could save was a grocery store. I think it was close to $1,200 a month, and that's a salary for someone that they can keep working is how they looked at it. And they get their money back next day or same day, and I give them a free checking account, and it's just more or less having the opportunity to have that working capital available versus waiting 2 to 3 days for it.
No, that's great. And I mean, you see how managing even those little areas impacts the other resources, right? The other assets, the human capital that you mentioned there. Kathleen, I asked you the same question. If you're working with a lot of small and independent businesses, what are their main issues that you're hearing about at this point in time?
Well, since I'm on the retail side, the number one issue is probably some kind of lease adjustment. And can I get my rent reduced? If I'm going to enter into a new lease, can I get a better deal? How do I negotiate with my landlord? So if we take some of those questions, I think the answer to can I get my rent reduced is probably it depends on a case-by-case basis. Some landlords are smarter than others. When a landlord talks to us, we are suggesting to them that these are spaces that are going to be hard to backfill in the short term, and that they might be smarter to make a rent adjustment and keep a good tenant than to be a tough guy and let them go and then find that their space is empty. Coming here, I was in a phone conversation with my own landlord. We have not been in our offices for 4 months, and my landlord's been terrific. But last week he sent me an email and said, "Oh, and by the way, your rent goes up next month." And I thought, well, it's just in my lease. You know, I've got a periodic rise in my lease. And so I called him and said, "Look, I left you a check for the full month's rent to pick up, but can I not have my rent go up when I haven't been in the office for 4 months?" And he said, "Sure." And he's I think it's important for us to remember that landlords have bills to pay too. So there's that. And then if you're entering into a new lease, how do you do it? And what impact does this have on a new lease? And it probably depends on the nature of your business. If you're a restaurant, you got 12 months ahead of you that are going to be pretty tough. Your landlord needs to take account of that. But those are the things that are coming at us. They're real estate questions.
Do you feel that there have been changing attitudes from March, April to now July, August, Kathleen?
I think in March and April, everyone was instantly sympathetic. I think in March and April, everyone was willing to do a deal. I think as this has gone on, it has taken a toll on both sides, on the tenants and the landlords. And the landlords' bills have not stopped. And it's getting harder and harder for them mentally, if not financially, to remain sympathetic. So they're going to be asking questions. Did you get PPP? Did you get EIDL? Basically what they want is shared suffering, most of them.
Yeah.
And Kathleen, to follow up on that from that perspective, is a small business required to give their landlord information on whether they received the PPP or EIDL, or where they are, what you're feeling on that. That's kind of a question I've gotten with other small businesses that I've talked to. Do I need to share that with my landlord?
Well, Audra, every lease is different. There are leases which have provisions that say that the landlord is entitled to see your financial information on some kind of periodic basis. If you're a restaurant, that's very common in a lease. Even for a retailer, that's very common. If you're renting an office, I would say that that's pretty uncommon. But you've got to look first at your lease. And then you've got to think about your relationship with your landlord. I mean, if you're asking for a rent abatement, truthfully, the landlord, we're going to go back to shared suffering. If you can say to him, I didn't get idle, or yes, I got PPP, but now it's gone and I'm still trying, as I said to my landlord, I got 9 mouths to feed. So this relatively small rent increase is actually meaningful to me. You've got to decide, but this is a time when relationships are going to be paramount, and it is not a time to play unnecessary games. Dwayne, what do you think about that?
I totally agree. I just was in a situation this week where it's a staffing company and she has a cleaning division. She negotiated to move into a larger office because during this time, one of the major tenants in the building moved out. So the building is probably 70% empty. So the landlord was renting that one of these spaces for $3,000 a month. She asked her if she wanted it for $3,000. She said no, but this is what I'll do. Let's negotiate. How about if I have my contractors clean the building, and you take my rent to $1,500 a month?
Yeah.
And she jumped all over it because one of the big things is she's trying to get more tenants. So as the building looks more engageable, where people want to come in and view the building, that's an expense she doesn't have to pay anymore because it's already cleaned. And she actually says she's going to clean the parking lot and do some other things that has never been done.
And that's a sales feature right now for a landlord, because we're living in what I call the theater of clean. Everybody's concerned about cleanliness, and they want to see it, and they want to see it being done, and they want to know that it's a priority. So if the landlord can say, you know, I've got a top-notch cleaning service that goes through here on this periodic basis and does this, 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 and this, that's a selling point.
Absolutely. Absolutely. I mean, and she's gotten from that, she told me the landlord literally said, hey, I got another building. Would you be interested in cleaning that?
Yep.
So I know, Dwayne, you and I had talked about the fact that from a bank's perspective, there's some differing views now on some types of businesses that weren't, considered higher risk by a bank previously. Share with us a little bit about what you're seeing from that standpoint now when it comes to lending and loans and credit.
Okay, so Kathleen, you can't laugh. No laughing.
Okay, how do we laugh?
So banks have literally kind of changed their viewpoint. They literally, and I can speak for U.S. Bank, we literally love investment property, typically. We love strip centers. We love commercial investment property. We love I'm going to use non-Amazon properties, okay? So you have tenants that don't really compete with Amazon products that can be delivered. So you got a restaurant, a Subway or a breakfast restaurant, a Subway, a nail salon, and maybe like an office building, a business on the other side. Those don't compete with Amazon. Amazon's not delivering yet Subway, and they're not doing nails. So that makes that property more stable, believe it or not. Now, because of COVID-19, restaurants, Subway, nail salons are all high risk. So the way the banks are looking at them is they want a lower loan to value to secure their positioning. They want a guarantor that's strong, but then they want to know what you went through during COVID-19. Did all your tenants stop paying? did you give all of them, as you mentioned, the tax of the ability not to pay for 90 days? It's been challenging for a lot of banks just because they're just backing out of it. Yesterday evening, I got a referral from another bank because they said we're just out of the multifamily space now until things change. So I like your point earlier, Kathleen, where you said it's a shared experience. It's the bank and the landlord, the owner of the property. We're all sharing it because if those tenants all leave right now, the bank has the property and the tenant can't pay for it. So what do? You know, the court systems, the last 90 days for evictions have been closed. You couldn't even file. So you're 180 days out before you even start to get into it. And
what
everybody
people, sorry, Dwayne.
What
people don't realize is banks don't actually want to own property.
No. You know, and I told Audra earlier that banks are for profit. That's the thing that people forget. They're like, oh, they're such a good community bank. They're still for profit. So they're not going to give you the loan for free. They have to measure that risk factor. And right now, I just rode past 3 restaurants, okay? Haven't had lunch yet, so I was like, let me grab something to the drive-thru. The drive-thrus are ridiculous. And it was 2:30. So no one is eating inside anymore. So that's changed the way they do business drastically. I mean, why do I need this big building now when I can probably go and get me a food truck and just drive around town where people are?
I am going to say there that we need to avoid the tendency to apply permanent solutions to temporary circumstances.
Right.
We're going to get through this. And when we do, people are not going to have changed dramatically. When I've been doing these presentations for clients and leadership groups, I was looking for a comparison that would be relevant. And the one that I found that is the most relevant is the 1918 flu pandemic, when 675,000 Americans died. We canceled funerals and church services and performing arts. We had a rise of white supremacy. We had an anti-immigrant wave. We had restaurants closing. Everybody had to wear a mask. In 1920, we had a recession. In 1921, we had an 8-month depression. And in 1922, welcome to the Jazz Age. We went right back to normal. And I think that is going to happen. So I think you're 100% right about drive-thrus. I think that's a very wise point. But I also think that the restaurants that survive this are going to be the ones that can figure out how to survive with about 50% pickup or delivery, and who can just hunker down and take no profits but a break even until approximately this time next year, and then they'll be fine. Now,
you're absolutely right. You're 100% right. I think another thing that's changing in that industry right now, just to go back a little bit, is the credit card processing. So a few of the businesses I stopped by, restaurants, they no longer take cash. They no longer take checks. They only want credit cards because they feel that, you know, cash is a problem now. It's dirty. So it's gotten them more fearful, which is losing them some business because a lot of people are afraid to use credit cards, debit cards, because of what's happened in the past, or may not even have one.
I will say, Dwayne, I really loved your early point, and I'm going to recommend it to clients, which is take a look at your servicing fees and shop them. Because if a restaurant can save $300, $400, $500 a month, that's part of how you hunker down.
Absolutely.
So we actually have a restaurant that just joined us on the call today. AJ, how are you?
I'm great. How are you?
I'm doing great, thank you. So let's take what Kathleen and Dwayne have just said and apply it to Sassafras Bakery. How have you changed your operations or how you use your assets in the past couple months to make you more lean, make you more efficient, and as Kathleen says, hunker down until we come out on the other side of this?
Where do I start? Definitely no cash. And that's a real surprise to a lot of customers. We've got a carry out walk-up window, so no dine-in. We're pushing pre-orders, and that they're getting lazy about getting those orders in, but we're still pushing for it. So I'm spending money on lots of disposable packaging.
So when you look at your model, AJ, do you think that this is sustainable for a certain amount of time? Are you even looking at your inventory about what you can make that you can get out the door quickly, not have to have the carry cost, anything like that?
Yeah, sales have been on the decline since the governor opened dine-in and patio in late May. Right now, the last couple of weeks, no, it's not sustainable. So I'm trying to figure out where to go next. Our coffee business, we do a great margin on lattes, and those sales are just tanked, and I'm not sure how to get those back. So I'm looking at a few things for. And it is hot outside, so people don't want coffee, but we do iced lattes and that kind of thing. So, okay. Yeah, I'm reshuffling the deck and not sure which card to pull right now.
Well, it's a constant reshuffling at this point in time. Yeah, on a day-to-day basis. So, Rhea, I wanted to come to you next. Obviously, you have a lot of experience in Cincinnati and Southern Ohio. Wanted to pose that same question to you. What are you seeing small businesses do from a asset allocation, asset efficiency basis to kind of stem the tide at this point in time?
So what I'm seeing is really folks looking at their human asset, for lack of a better word. And that's where they're using staffing as a way to manage the bottom line. So there's that double-edged sword about if you want to take advantage of PPP, you have to keep staffing levels up to a certain point. But the reality is that if you're in a service and related industries, the staffing is probably the larger portion of what your expenses are. And so they're trying to figure out how to do more with less. I was just talking to a client earlier today who has had folks choose not to come back and who are choosing to work someplace differently just for the safety and security of it all. And so from what I'm seeing, it's not a lot about the hard assets per se, because some of those things are required in their business. It really is about how can I manage my payroll cost? How can I reduce my inventory if I've got an inventory issue to be able to maintain my business without having to liquidate assets right now. I don't see folks, as I would say, liquidating assets right now because, again, I think going back to what Kathleen said, recognizing that this is not a permanent situation. So I don't want to have to trim back so far that I can't grow again when the time comes. So it's the people is where the hit is really coming from most of what I'm seeing.
I mean, I think it's important that we look at, as a banker, I'm going to speak from the bank's perspective, of course, but just by products alone, having, you got to make people compete, and you got to see what's best for your business. I mean, the example of the savings of $600 a month on credit card processing, that equates to real dollars. And the systems that come along with that you might be able to you might be able to attach the inventory to it, and that piece alone saves you money, because instead of ordering early, you can see how your inventory is going. I mean, there's so many different products that you must be aware of. I mean, this is the time where you want to shop and see what you got. You know, I love how Kathleen started out, where you have to be ready to just, you know, ask the question. You know, I haven't been here for 4 months. You want to raise my rent? And like she said, most people understand. You know, we're going through this together. So when you're looking at different banks you work with, you got to ask more questions so you get more answers than you've ever gotten before. And if you don't get the right answer, I tell everybody, go across the street, another bank right across the street, get the answers you want to make sure you can continue to run your business.
And Dwayne, I think I think in dealing with banks, in dealing with landlords, in dealing with vendors, I think for many of us, and I'll include myself in this, I didn't want to make that call to my landlord. I didn't want to call him up and say, hey, I got 9 mouths to feed. I need you to cut me a break here. You feel a little bit like, wait, I want you to think I'm a big success. I don't want you to think I'm like, you know, here I am on the make with you. But so we're all a little bit edgy about talking about money, about asking for breaks, about asking those hard questions, about calling somebody and saying, look, I'll pay you, but I got to go from 45 days to 60 or 75. We gotta do it. We got to do those tough things because our very survival depends on it. But it ought to be a little bit easier if we could get over our internal resistance, because everybody's having to do it.
Yeah, I tell people in this situation, you're special, but you're not that special. We're all going through this. You know,
right.
It didn't just pick you. It didn't just pick you. It's everybody. You know, I had a customer 2 weeks ago, been with the bank 40 years, been with his bank for 40 years. He started at 20 in this business. He just switched everything over to me because I could save him money. And I said, you can switch back when you're ready. He was like, why would I do that? I'm saving. You know, my job is to help you develop and keep your business right now. The bank has changed my whole function. They want me to walk into small businesses, help put out a plan to help them be successful.
Well, and I'll pick up on that and say that I have dealt with a national bank, and I've had a very good relationship with them. And I have had friends who have been senior executives with that particular bank. And I never had a problem with them until they didn't return my calls about PPP. Yeah. And one of my colleagues said, oh, well, if they're not returning your calls, you need to call this other bank over here. It was not US Bank, I want to say, Dwayne. You need to call this other bank over here because they're small, but they will do a heck of a job. And I called that small bank and they got me my PPP. So it's going to be tricky to unwind my relationship with my original bank, but man, it dented my loyalty.
Well, yeah. I mean, when you need them, they're not there.
That was it.
I mean, that's most times.
So let's kind of pivot a little bit and talk about the EIDL loan. And I know that's one that several small businesses that we've worked with have received. Some have chosen to and some not, depending on their needs. But share with us, maybe Dwayne, you can start and share with us where you're seeing and some examples of companies that are using the EIDL loan from a working capital perspective and how they're using it or where it's really benefiting the small business.
So the EIDL loan is really interesting because it's a government-based loan. Banks have nothing to do with it. So your funds come directly from the government. So the pool of funds all come from the PPP loan. So those two together make up what government gives us, the banks and everybody else. So this last PPP round of money that we went through, not the new one that's supposed to be coming out, but the last round of money, the government put a lot of things in place to kind of push those loans out faster. You know, they had some technology issues because the thing is, no one was set up to take that many loans at one time. So the EIDL loan was set up just for working capital. You could pretty much do whatever you want with that one, as opposed to the PPP loan was structured. Now, I'll tell you the structure at the last call was still 60-40, where 60% was given to look for working capital, 40% was to retain employees, or 60%, I'm sorry, I said that backwards. 60% was to retain employees and 40% was working capital. And the reason why they changed that from the 70-25 is no business could meet that. Businesses were struggling to meet that requirement because of the lack of employees that would come back to work, as well as they needed more working capital because they've been closed for 60 days or 90 days. So the two differences between them is the EIDL had no restrictions. It started off to be a $10,000 grant program, and it's changed its way around to some people got loans now from the EIDL that are directly payable to the government. I mean, they're at 1% or 2.5%. They're really low rates, but when you apply for the EIDL, you expected it to be a grant based. The PPP, they forgave. I think the dollar amount was $150,000. Is that right, Audra?
I'd have to look.
Anything that sounds like it's right. I think it's anything under 150 is what the government is saying is going to be available for the forgiveness. So the banks are looking through and reviewing based off of that information now just to see if the criteria were met from the program. And I think that's been probably the biggest challenge, because if you think about it, you gave me $90,000 in June, and I'm supposed to meet a 90-day, not even 90, 30-day requirement to spend all $80,000 I got to bring back my employees who feel like, hey, I make more money now staying at home with a $600 bump and getting my regular salary. The PPP program, when it initially came out, we all said free money, right? That quickly changed. Now they are having repayment terms that are stretching from the 18 months to 60 months at 1%. So it's still a lot of changes. I believe the government had good intentions. I just think that they didn't have the structure around it. And now, I mean, I remember when it first came out, they said, this is just for banks. I've seen credit card processing agents using it, not-for-profits using it. I think that there's such a usage of the program that people signed up for sometimes, and it was the wrong intent because they get a payment behind clients going through the program. And that could be detrimental to everybody. Hence, there's been so much fraud.
Right.
And Dwayne, I also want to, the other side of it that I think when we talk about the PPP loan that hasn't really been talked about is that there are tax consequences on the tail end that are going to impact, because from my understanding, if you got $100,000 and you used $100,000 for payroll, you don't get to deduct that payroll as expenses for tax purposes. And so
I've heard the same thing.
Yeah, so I think that to the extent that any of you all had this conversation and you can share, make sure people go back and look at the fine print, because if you're filing your tax returns and you had $120,000 of labor and you used $100,000, that $100,000 is no longer deductible expense. And on the one hand, I understand it because you use tax dollars to pay that payroll, so it's kind of sort of being a wash. But I'm not sure that I have seen yet how that plays out when you start filing your 1065 or whatever form that you use. So
But
So,
Rhea, it's also not taxable as income, so it should be
Right. It should be a wash.
approximately neutral.
yeah, it should be,
Absolutely.
but again,
But we're constantly, not we, the government is constantly changing that program, and that's what's scary. I've actually had clients give back their PPP because of just that. I mean, the fear factor of the taxes, the restrictions. I mean, banks are even looking at it from the standpoint of, do we count that as debt? You know, because if you got $250,000, do we count that as debt on your, it's a government program. Are we allowed to count that as actual debt in your business to give you a monthly schedule on it? Those are some of the questions we still don't know yet.
Well, I am going to say, though, as a small business, that the PPP was invaluable.
Yes.
It let me ensure that people had consistent income. So, and I would have either had to lay people off, or I would have really struggled with the cost of paying them. So my perspective might be a little different, which is that I think these problems are worth working through because the value of the PPP was tremendous.
100%. I agree. 100%. When you go, I got a contractor, he has 120 people working for him. Imagine that 120 people unemployed and they have 2 kids apiece and they're the breadwinner. It's unbelievable the impact of the PPP program. And it's not a bad program, but you got to think, banks had 7 days to get money, to get a system together that will roll out and be able to take the volume that they did. I mean, we literally, at 74,000 employees, we had half of that working on the PPP program.
And I've heard that from others, that everybody in the bank was working on PPP. And we like to talk about fraud and waste in government, and this is going to be a target, and we're going to read all those stories. And certainly some of the wrong people may have gotten PPP, because when is that ever not the case? But I think PPP probably prevented an economic explosion.
I agree. Yeah. When they had that government, even the government wasn't ready for all this. So how do you predict a pandemic, y'all? I mean, everybody. So, it's sad, but people are going to take advantage of it. I mean, they were applying. The government literally said you can only apply at one bank, one institution for the loan. I was on a calling effort where I had to call people and say, you need to return either our money or the other bank's money, because they got it too. One guy said he got it 3 times.
So let's spin this conversation forward. And I know we have Gail on and AJ and Kathleen and a lot of small business owners on here. And let's talk about EIDL real quick, especially because there's low interest rates. I know that some businesses have got upwards of $125,000 on the EIDL loans. Because we can look at that as an asset going forward, what do you think small businesses should be using that EIDL money for when it comes to either stemming the tide or planning for 6 months to 12 months out at this point in time?
It's working capital.
Flat out, it's working capital. You need to look at your employees, your rent. It's a balancing act. I mean, this is where business coaches that work with these clients and have a relationship. And I love that whole relationship piece, because that's all it is. You need to have somebody to bounce ideas off of that, will tell you the truth. Don't go buy a new car. This is not the time to buy a house because the rates are low.
So let me paint an example, and I'm going to use AJ here because she's center on my screen. So she has shifted operations. Nobody comes into Sassafras. She has ordering systems now. She has an ordering window. She sees inventory flux on a week-by-week basis. And we can use the restaurant industry as a whole, but just look at that example. If we're planning for January, February, and we have advisors and we have coaches, what are some of the things that we need to either double down on, ignore, or come up with some type of concerted effort to where we're addressing all these different factors?
I would say you need to sit down with your accountant. That's your first point. You need to see where you can possibly cut costs somewhere. You need to see how you can manage. AJ's doing it right. She's looking at her inventory. She's closed the inside. Well, how many people now do you need to operate? If you want to keep it at 8 people, well, they got to have a function to be able for you to keep them hired. It's unfortunate, but you just can't pay people just to come in and look at you work. Everybody's got to have a purpose for being there. You got to look at how can you improve systems that will increase cash flow. How do you gain more business? Do you have, coffee? I'm a huge coffee drinker. I love coffee. So how do I get more coffee people in? Do I add a donut line? Do I look to have coffee at a later point of the day, so as people are driving home, it's ready? Do I do sales? A big thing that one of my clients did at his little restaurant was he changed the hours of operation, but then what he did was he started offering membership cards. So they pay up front $20 for a membership card. When they go through his window, it's $1 for coffee when they present the card.
You also have to be careful, though, and think about your key people. If you accept the concept that we have about 8 tough months ahead of us, which will get us to April of next year, you have to think about how to come out of this. We can't just now be thinking about how to endure. We have to think about how to grow when the moment for growth arrives. And if you're not thinking about that, when that moment comes, you're going to waste it. So if you have some working capital and you're looking at cutting your team, but in cutting your team, it is going to impede your ability to come out strong and grow, then think about whether that's the best thing to do. Because again, let's not make permanent decisions based on temporary circumstances. So we got to think forward. The city of Cincinnati, in its budget, and city budgets are difficult and they're required to be balanced. And in Ohio, they're driven by income tax. And of course, income tax is down. But the city of Cincinnati, the major cuts in the city budget were in the planning and the economic development departments. Those are your engines for growth.
Yeah.
So if you've cut your engines for growth, then you can't really come out strong, which means you don't bounce back in 12 months. It maybe takes you 24 or 36. So there is a tension there between what you need to do now and what you need for the future.
Yeah, I think
and that's a great point.
Yeah.
I'm sorry, go ahead, Audrey.
No, I was just going to say, Kathleen, I think that's a great perspective. And one of the things certainly we've always talked about in the Goldman Sachs program, really the tenet of the program is building that growth. What I do want to allow a little bit of time for, and we're coming up on just about 12 minutes left, is really opening it up for questions to see if anybody else who's on the call has some questions. I know, AJ, we've picked on you a lot from a perspective of just using you as an example, but I certainly know that you're always looking to what you're going to do next. Any questions from your perspective?
I I did get an EIDL, and I don't know what to do with it. And I don't feel like this conversation is really, do I just sit on it until I need it?
If you can.
Yeah.
Yeah.
Yeah, if you can.
Now,
And I'll pick
they're
that-
proposing to bring out some new money. Proposing is the word. It's called the recovery. I don't know. There's no information on it, but they're talking about it. And I don't know where you're located at, AJ, but look into your communities. Here in Columbus, Ohio, there is a program out where if you're in an LMI area, the state of Ohio is giving you up to $30,000.
Yeah,
and
I'm
there's
not
no
in
restrictions.
Yeah, I looked into it. I'm not in that area. I'm in Worthington.
So you still might be eligible for your PPP part of it because there's 3 parts to the program. So they could do a PPE where they give you the equipment up to $10,000 for equipment to keep your employees safe versus you having to pay for it with equipment-wise, gloves and all that stuff.
So AJ, how did you feel about that answer of sitting on it?
I'm fine with it. I mean, the interest rate is so low. Yeah, as of right now, I can sit on it. So
One of the hardest things I think for small businesses to get is working capital, which means we're always scratching for money to grow and even sometimes money to just sustain. Because I don't know about your business may have steady cash flow. Mine does not. And, we're commission and consulting fee driven, and those are not consistent. So for me, just having some money in the bank to even out my cash flow is helpful, because then if I need to pull something out, because I can always look down the line and say, oh yeah, if everything comes in the way it's supposed to, I'll be rolling in dough. But when does everything ever come in the way it's supposed to? So I think sitting on it is a perfectly valid choice. And I think I am taking the view that the United States government has been wise enough to see and invest in my little business.
yeah.
And if I might add, I have been, when I talk to folk, my conversation is, if you can get an idle loan, it's worth looking at it right now, because I got to tell you, 1% money over the time frame that they're giving, or 2% money, that is 30 years?
30 years.
30 years.
Unbelievable. It will never happen again. It will never happen again in life. So if you're going to grow this year, or you're going to grow 5 years from now, you're still not going to get that kind of money available for your growth. So if you got it, I totally agree with sitting on it, being the recovering banker that I am. But at the same time, I also, it's just not going to happen. So I think it is a gift horse that will probably never be seen again in life.
That's what I meant. All of a sudden, the United States government was smart enough to say, we need to protect Urban Fast Forward. And I am not gonna be insulted by their belief in me.
AJ, that's your growth fund.
Yep.
Yeah.
Yep.
And hey, Gail, I want to give you a chance too, if you want to weigh in. What are some thoughts or any questions on your side?
Well, it's funny. I have the PPP and I got the EIDL advance, and I've had the offer for the EIDL loan, and I did not take it. Somewhat like AJ was saying, I didn't have the immediate need, but I haven't closed it out. And for the same reasons, I said having cash flow, therefore a cushion for a pivot, etc. But maybe I was just reading the granularity of what it was required to do, etc. And like, okay, do I have these particular needs? But maybe I'll opt into the paper. But for my business, we were able to pivot pretty well. Actually, we're doing better because we moved everything online and eliminated staffing and, rent. Less top line revenue, but more bottom line revenue.
And Gail, tell everyone what you do again.
I have a cognitive training program where I work with the courts, and of course they were down for quite a while, but it'll be pay me now or pay me later. Crime is always recession proof. Let's just say that.
Right. That's right.
But we did work with our courts, and because of good relationships, we called them immediately. Do you mind if we deliver our classes virtually? And they said yes. So we've used the extra time to add some other lines of business and are focusing really much on everybody who's unemployed is going to be able to have a voucher, if you will, for training. So that's the new vertical we're standing up. How can we take advantage of the people who are going to be unemployed, underemployed, et cetera? They're eligible for Ohio Means Jobs training programs, and that's the vertical we're standing up.
Well, and I think a couple of the themes that I heard talked about today, and John, I'll let you weigh in too, that, you know, we've heard throughout the time that we've been doing the innovation hours is really about you know, creativity and innovation within your business. And I think, you know, there were some great examples of that in terms of working with your landlord and how you might provide service. Dwayne, you had a great example of somebody providing services and taking some additional space. So look at creative ways that you can either grow the business on one side through a pivot or cut cost from a sort of a unique relationship with the landlord. AJ, you might consider making your landlord breakfast every month for a break on the lease. But so I think that those are definitely some key themes that are interesting, and relationships. You know, it's never too early or late, I think, now to really develop the relationships with people like your banker, people like a Kathleen with Urban Fast Forward who can help you renegotiate a lease. Or, you know, see things from a different perspective where your real estate is concerned. And of course, your banker and your accountant, and how important those people are, and really kind of, you know, advising you throughout the process. So John, would you add anything additional from that perspective?
You said a couple things that I picked up on, Audra. The first is, it always goes back to people, right? Mm-hmm. I mean, it's a simple statement. However, look at the partnerships that have been created in our time here, right? Going back and forth with all the different parties that have joined onto these hours. There is the belief that as small business owners, you have what you do really well, but maybe you don't believe in the other skill sets, that you just don't use those muscles to flex very often. I always go back to one of the great things we learned from our first cohort of Goldman Sachs was you should believe in yourself to be able to get through problems, to think creatively, and to walk into a negotiation that you have the ability to express what you want and get what you want. I think sometimes it's just that fear factor that we don't want to rip off that Band-Aid because we just never have done that before. But I think as small business owners, it always comes down to people. It always comes down to relationships and providing value to all those stakeholders that we have.
And Kathleen and Dwayne, before you maybe we log off here, if you would, can you put your email contact information in the chat box for us so that everybody has that here? And while you're doing that, any final questions we have for our guests today?
If Dwayne could put something in also about the LMI program he was talking about, or if you could just your email and I'll email you about it.
Okay.
That will be fine. I'm losing right now, so I may have to email Audra. I hope you don't mind my information.
That's great. Yeah, that's fine, Dwayne.
I'm going in and out.
No problem. And Kathleen, if you need to do the same, I will get that information out. Two minutes left, Dwayne and Kathleen. I want you to give your 1 minute small business last piece of advice.
Don't do a real estate deal without a real estate professional.
Oh, hallelujah.
Call me. I'm better at this than you are. I can't make a cake. I can't clean an office. I can't drive a truck. I can't do any of those things, but I'm better than you are at real estate. I guarantee it.
A pro, an expert at your craft. Absolutely. Dwayne, how about you?
I would ask the question to your banker, let's reduce fees and see what they come back at. Don't be afraid to ask them a tough question. Now is not the time.
Well, great advice. Thank you all for joining our Small Business Innovation Hour today. It's been another great conversation, and I hope it provided at least a few nuggets of advice and some great opportunities to connect with some experts if you need them. And as John and I always say, if there's anything that you need from us, please feel free to reach out. We're here to help and to provide resources in whatever way that you need them. So